Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. After starting 2022 with 3 straight weekly declines, the major U.S. stock indexes posted their second positive week in a row, eclipsing the previous week's modest gains. Markets were driven by jobs numbers, earnings reports, and the increasingly likely near-term prospect of rising interest rates. Earnings performance continued to improve, as fourth-quarter profits at companies in the S&P 500 were expected to increase more than 29%, based on companies that have reported so far and forecasts for firms that haven't yet released earnings. That's up from the 24% rise that had been projected at the end of the previous week. About 56% of companies had reported results as of Friday. The Nasdaq's volatility was again on full display. On Monday, the technology stock-oriented index surged 3.4%. It posted modest gains on Tuesday and Wednesday, only to tumble 3.7% on Thursday before finishing the week with a 1.6% gain on Friday. The S&P 500 fell 5.3% in the first month of 2022, while the Nasdaq had an even tougher time, dropping around 9.0%. Across the S&P 500, energy was the top-performing sector, with a 19.0% gain. Consumer discretionary was the weakest, as it tumbled 9.7%. Our first stock type is dividend-earning stocks. These are a great way to earn passive income. This week's suggestion is Polaris, with ticker symbol PII. Polaris Incorporated is an American manufacturer of motorcycles, snowmobiles, all-terrain vehicles, and neighborhood electric vehicles. It operates in 5 segments: ORV snowmobiles, motorcycles, global adjacent markets, aftermarket, and boats. The company offers off-road vehicles, including all-terrain vehicles and side-by-side vehicles, snowmobiles and snow bikes conversion kit systems, motorcycles, and low-emission light-duty hauling passenger and industrial vehicles. It also produces replacement parts and accessories comprising winches, bumper, plows, racks, wheels and tires, pull-behinds, cab systems, lighting and audio systems, cargo box accessories, tracks, and oil for ORVs, snowmobile accessories, which comprise covers, traction products, electric starters, reverse kits, tracks, bags, windshields, oil, and lubricants, and motorcycle accessories, including e-saddlebags, handlebars, backrests, exhausts, windshields, seats, oil, and various chrome accessories. In addition, the company offers gear and apparel, such as helmets, jackets, gloves, pants, hats, goggles, boots, bibs, and leathers, off-road Jeep and truck accessories, and pontoon and deck boats. The company provides its products through dealers and distributors, and online, and aftermarket parts and accessories through 95 brick-and-mortar retail centers, call centers, and e-commerce sites. The company was founded in 1954 and is headquartered in Medina, Minnesota. Mike Speetzen has been serving as the Chief Executive Officer since January 2021. Some technical analysis data shows that Polaris's return on equity is 53.4%, its average volume is about 651.8 thousand, its market cap is $6.99 billion, its beta is 1.71, its PE ratio is 14.61, its PEG ratio is 0.96 and its EPS is $7.88. Our rating is 10 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Polaris in the last 3 months, the average price target is $140.17, with a high estimate of $165 and a low estimate of $117. With current price at $115.15, this would mean about 21.7% average profit over the next year. Polaris pays an annual dividend of $3.15, which amounts to a dividend yield of 2.74% and a dividend growth of 1.61%. The ex-dividend date is the 28th of February, so buying a Polaris stock by then will pay you 64 cents on 15th March. The last 2 years have been volatile for Polaris. That's to be expected, as this is an original equipment manufacturer building products for the discretionary leisure market. It's been exposed to serious headwinds that have made it hard to gain traction even as consumers have started spending more, even as outdoor activities have taken on a premium. But the company has the advantages of an established name and a loyal customer base, including valuable vehicle contracts with the U.S. Department of Defense. Polaris now trades at levels too cheap to ignore, and there is plenty of opportunity for investors. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Cloudflare, with ticker symbol NET. Cloudflare Incorporated is an American web infrastructure and website security company that provides content delivery network and DDoS mitigation services. Its services occur between a website's visitor and the Cloudflare customer's hosting provider, acting as a reverse proxy for websites. Its security products comprise Cloud Firewall, bot management, distributed denial of service, Internet of Things, SSL, TLS, secure origin connection, and rate limiting products. The company also offers performance solutions, which include content delivery, intelligent routing, and mobile software development kit, as well as content, mobile, and image optimization solutions. The company was founded in 2009 and is headquartered in San Francisco, California. Matthew Prince is Cloudflare's co-founder and chief executive officer. Some technical analysis data shows that Cloudflare's return on equity is minus 25.82%, its average volume is about 4.93 million, its market cap is $33.2 billion, its beta is 0.8, its PE ratio is minus 147.6, its EPS is minus 70 cents, and its asset growth is 68.86%. Despite our rating as 8, we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Cloudflare in the last 3 months, the average price target is $149.60, with a high estimate of $250 and a low estimate of $95. With current price at $103.19, this would mean about 45% average profit over the next year. Cloudflare is a great company and this is a long-term investment. It's attracted millions of users of its products and is aiming to disrupt the status quo in cloud computing infrastructure, like elements of Amazon Web Services, so it has tons of potential. And it's growing sales at a more than 50% year-over-year clip. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is Apple, with ticker symbol Apple. Apple Incorporated is an American multinational technology company that specializes in consumer electronics, software and online services. Apple is the largest information technology company by revenue and it is the world's most valuable company, the fourth largest personal computer vendor by unit sales and second largest mobile phone manufacturer. It is one of the big 5 American information technology companies. Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. It also sells various related services. In addition, the company offers iPhone, a line of smartphones, Mac, a line of personal computers, iPad, a line of multi-purpose tablets, AirPods Max, an over-ear wireless headphone, and wearables, home, and accessories comprising AirPods, Apple TV, Apple Watch, Beats products, HomePod, and iPod Touch. Further, it provides Apple Care support services, cloud services, store services, and operates various platforms, including the App Store that allow customers to discover and download applications and digital content, such as books, music, video, games, and podcasts. Additionally, the company offers various services, such as Apple Arcade, a game subscription service, Apple Music, which offers users a curated listening experience with on-demand radio stations, Apple News Plus, a subscription news and magazine service, Apple TV Plus, which offers exclusive original content, Apple Card, a co-branded credit card, and Apple Pay, a cashless payment service, as well as licenses its intellectual property. The company serves consumers, and small and mid-sized businesses, and the education, enterprise, and government markets. It distributes third-party applications for its products through the App Store. The company was founded in 1976 and is headquartered in Cupertino, California. Tim Cook has served as Apple's chief executive officer since August 2011. Some technical analysis data shows that Apple's return on equity is 149.8%, its average volume is about 101 million, its market cap is $2.81 trillion, its beta is 1.19, its PE ratio is 28.66, its PEG ratio is 3.36, its EPS is $6.02, and its return on capital is 38%. Our rating is 9 and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Apple in the last 3 months, the average price target is $192.18, with a high estimate of $215 and a low estimate of $161. With current price at $172.39, this implies a 11.48% upside potential over the next year. Apple stock has rallied significantly following its big Q1 release. First quarter earnings surged above $34 billion, while revenue surged to $123.95 billion, up around 11% year over year. CEO Tim Cook gave positive signs that COVID-19 induced supply chain conditions were showing signs of improvement. On the hardware front, strength was prominent across the board, with the exception of the iPad. Indeed, comparables were tough, but the company did a respectable job, especially in the Mac and services categories, which experienced 24% and 25% in year-over-year growth, respectively. Apple stock is the real deal, with real earnings, precisely what investors want to see in a market that's no longer impressed by just sales growth. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Amgen, Hasbro and AECOM will release earnings on Monday 7 February. Alibaba Group, Pfizer, BP, Fiserv, and S&P Global Incorporated will release earnings on Tuesday 8 February. Wednesday 9 February will be the most popular day of the week as Toyota, the Walt Disney Company, CVS Health, GlaxoSmithKline and Uber among others will release their earnings on this day. Coca-Cola Company, PepsiCo, AstraZeneca, Philip Morris International and Moody's Corporation will release earnings on Thursday 10 February. Finally, Enbridge and Under Armour will release earnings on Friday 11 February. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 7 February is the ex-dividend date for American Water, Energy Transfer LP, MetLife and Global Partners LP. Tuesday 8 February is the ex-dividend date for Constellation Brands and Home Street Bank. Wednesday 9 February is the ex-dividend date for ExxonMobil, American Electric Power, and S&P Global Incorporated. Thursday 10 February is the ex-dividend date for IBM, Visa and Energy. Finally, Friday 11 February is the ex-dividend date for W.W. Grainger and WEC Energy Group. Be sure to buy any of the above stocks before the market closing of the ex-dividend's date previous day to benefit from the dividend payment. A few initial public offerings have been arranged for next week. Caraloha Incorporated, with ticker symbol Aloha, will be listed in NASDAQ Capital. There are 2.3 million shares offered at a price between $12 and $14. Caraloha is an omni-channel brand focused on soft and sustainable bedding, clothing and bath goods made of eco-friendly viscose from bamboo, or bamboo, one of the most renewable and sustainable resources on the planet. They market and sell their products through their fast-growing e-commerce channel, modern and efficient showrooms and wholesale channel. They are dedicated to creating a community for environmentally conscious consumers through their clean, sustainable, effective, and thoughtfully designed products. If you find this video useful, please like it, leave your comment below, share to a friend, and subscribe to our channel. See you next time.